Scott Bauer with Prosper Trading Academy. And, with geopolitical tensions ratcheting up here, one sector that is getting a very, very close look at is the defense sector. Names like Lockheed Martin, Northrop Grumman, Boeing. So, how do you trade that? Certainly over the last couple of days, we've seen not a spike, but we've seen those stocks on the rise. And, historically, I think you need to be very, very careful, not jumping into the fire, if you will, too quickly. So, news out that defense budgets may be going up because of, news coming out overseas, whatever it may be. I think you need to be very careful. So what I look at in situations like this is, what is the implied volatility doing? Are options getting more expensive, less expensive, the same? And what I see right now initially is a pretty big pop, a pretty big premium for these options right now. So when I look to possibly take a position in a stock like this that has news, or a sector that has news, if I see a big pop in volatility, I'm more or less going to be selling that volatility. And I'm not necessarily selling direction. So I don't mean just sell a call spread or sell a put spread. I actually want to sell both, because what typically will happen is the news dies down a little bit, and fundamentally, technically, that stock, starts to settle back in. So Lockheed Martin, for instance, I'm looking at selling an upside call spread and an upside put spread going out a week or two. Northrop Grumman is a little bit more difficult from the option side of things. The liquidity isn't really there. Boeing is another one that I'm definitely looking to do that in. Scott Bauer with Prosper Trading Academy.
Go to businessfirstam.com for where to see our show on TV.